Hey guys, welcome back. I hope you're having a good day today. So today's video is going to be about my portfolio that I currently hold in Trading 212 app. Now, you're going to be surprised when I show you this, but it's just some of the early rookie mistakes that I made. Now I'm very cautious about whenever I buy and sell the stocks. So don't be alarmed, it's all right. So let's get on to it. So this is my portfolio. I have invested so far 1,720 pounds. Now, not all of that I have invested. Some of them I got a free stock. We'll get to that. So another surprising thing that you're gonna see is that the big red number there, minus 506 as of right now. But that's not alarming, guys. That was just some of the rookie mistakes that I made when I started investing. I'm gonna get better to it. I'm gonna resolve that in the future, but right now the best thing to do is just hold on to the stocks that are going really down. So we'll get back to that in more details in the future video. This is just a simple walkthrough. So yeah, so the first stock I hold is a fractional stock. Now I don't have in me right now to buy the Google stock, which is currently selling at, which I can buy right now for $1,488. Which I don't have that money. So I have invested 12 pounds in it. Now it's going in a minus right now because recently they released their quarterly reports, and in this first time in 16 years Google has reported less sales, so that's why, and that's understandable. However, it was still less than the forecast figure, so that's a really good thing. Another stock I have, which is one more fractional stock, which is Amazon. Invested 10 pounds in it. It's giving me 120 plus. So hey, that's a good thing. Once again, don't have $3,167 to invest in it. I hope in the future I might, but currently I don't have it. So fractional share it is. I am planning to invest more in it, like get about 100 pounds or 200 pounds in the future, but not right now. Another stock which I hold is fractional share once again, which is Apple's. This is currently giving me 1.73 pounds plus because they recently also released their quarterly reports and they were just astonishing, like they were just so good. If you are in a position to buy the Apple stock, do so because they are paying a dividend in August. I forgot the date, but I will leave it down here. So they are planning to pay about 87 or around that figure. They're going to pay around that figure, so watch out for that, guys. And after that they are planning to split the stock, so depending on the price it will be divided by 4, and then if you hold one stock right now, that would be converted into 4 and the final value would be divided by 4. They just do that so that people don't get freaked out whenever they buy the Apple stock, because as of right now, 425 pounds is freaking me out. I cannot invest that much. But if it was 100 pounds, people would be more willing to buy. And that's what I'm gonna do. Once they split, I'm at least gonna have one stock of Apple. I would love to buy more, but I'm not in a position to do so. Now, the next stock is AstraZeneca. It's a pharmaceutical company. Doing really good right now. They're in a competition with GSK to find the vaccine for the coronavirus. So they are doing really good, and the great thing about this stock is that I got it for free, guys. So yeah, I didn't pay a penny for this stock. I shared the link with one of my family members. They got a free stock of National Grid it was, and I got a free stock of AstraZeneca. So that's just the free money, and I'm happy for that. It's currently giving me 1.38 plus, so that's a good news. Now from this point everything goes downhill. So I currently hold 172 stocks of Barclays. Now recently Barclays released their statement and it wasn't that great, so it has gone down, but it's a Barclays, guys. In the future they will recover, so that's a good investment. I try not to look at the negative figures because I know for sure that the companies like Barclays, they're gonna do better in the future. Next I hold is Boohoo. It's an online selling retail company, as you know. I hold 16 shares of them. Today they're doing really nice, but overall my position is negative £7.18 on it. It's fine. I know it's another great retail company, has potential in it. In the future, they are gonna do better. So yeah, this is just one of my. I remember buying this stock. I just invested it for the sake of the profit. As soon as I make some money on it, I'm gonna sell it off because I'm trying to take my portfolio towards the dividend paying shares. So I'm only going to invest in companies which pays dividend fund. So this is just I'm just holding on to it until it starts making profit. It goes up, and once it does, and when I get a good amount of return, I'm just going to sell it off. The next stock I have is a BP. Now once again, the whole oil industry is taking a hit, guys, so I'm not surprised that they are a bit negative right now, but that's fine. It's a BP. It has a strong history. They are a dividend paying company, so I'm not planning to sell this stock anytime soon unless something drastically happens, which I doubt it. But yeah, I'm just gonna hold on to it for better or worse and just let it do its thing, guys. The next stock, and this is my rookie mistake that I was talking about, guys. This is Cineval's share. Now when I started this, I believe it or not, this was my first stock, and I just like bought about 866 shares altogether, and that was just crazy, guys. You should never ever do that. I should have diversified this money into different companies. I should have, if I wanted to, I should have bought some shares of it, but not all of it. So that was just a rookie mistake. Now as you can see, I'm down 53.94% right now, but I'm just gonna hold on to it. I don't feel like selling it because that would be just waste of 366 pounds. I mean, I could lose more, but let's just see. I'm gonna see for a couple of months, wait it out, see what happens, and if my position gets worsened, I'm just gonna sell some of the stocks. But as of right now, I'm just trying to do nothing about it and just let it do its thing. The next stock I hold is Coca-Cola. Now if you're planning to do a dividend portfolio, you need to have Coca-Cola. Not only they have survived so many recessions, but they are one of the best dividend paying companies out there. Now I currently hold 1.3 shares of the Coca-Cola, cannot afford more than that. Now this is one of the shares which you don't look at. You just buy it and let it do its thing because you know it's gonna survive no matter what. Now the next share I hold is EasyJet. Now aviation company has also taken a huge hit by the COVID because obviously each and every single country is quarantining themselves, meaning they are not sending people out, they are not welcoming anybody from outside of the countries. So yeah, guys, they have taken a big hit. I currently hold 12.4 shares of them, and they are currently 38% minus. Now I'm not gonna sell them because I'm going to see aviation company is strong sector. Like there is no way that it will go down. The companies might go down, but the sector on its own, it's never gonna go down because this is one of the fastest travel that we have right now. Unless something super duper cool comes up, this is gonna survive one way or another. So I'm just gonna let it do its thing, even if it goes down. Unless EasyJet shut down suddenly, then I'll probably lose all my money, but I'm sure it's not gonna happen. The next shares I hold is GSK. They are once again a pharmaceutical company. Now as of right now, I'm doing so. They are also a dividend paying company, so I'm just gonna let them do their thing. GSK is a very strong company, top 10 in the UK, so nothing bad is gonna happen to them, even if they lose the race between AstraZeneca and to find the COVID vaccine. The stock might take a dip, but it's not gonna be significant. Since it's a dividend paying fund, I'm just gonna let it do its thing. The next stock I have is Gym Group. Now the gym. Now I bought 60 shares when they were closed down, but recently because they keep delaying the gym opening, they have taken a big hit. Now they have opened it again, but obviously it will take a few months, probably 4 to 5 months before they recover. I believe this is a good price, but you should guys do your own research before you buy them. I bought them when they were a bit high. I should have waited it out, but at that time they were actually planning to open it, so I thought it was okay. um, I will go on to the whole process of how now I buy the stocks. Before I was just like rookie mistake, seeing where the prices were, I was just buying. You should never do that, guys. But yeah, I hold 60 shares of them. They are not dividend paying company. I'm just gonna hold on to them until they make me a bit of a return, and then just sell it off and invest into other companies. Now the next company's share I hold is Legal and General Group. I have 1.3 shares of them. I remember buying this stock because I wanted to invest more in this company in the future, so I just bought one stock so I can keep getting a bit of update here and there. So in the future I might buy more stocks of this company as it is a dividend paying company. Next I have is Lloyds Bank Group. This is obviously Lloyds Bank. This is actually free of cost. Now I got a free share of National Grid by sharing a link with my family members. Now I'm not a big believer in National Grid. In the future I might invest in them. This is a dividend paying company, so I believe National Grid is not. So I sold everything that I got from National Grid and I just invested that money into the Lloyds Bank. So it is actually free of cost. I currently hold 28 shares of them. They are doing a bit bad because obviously coronavirus, but they're gonna do better in the future. So yeah. Next shares I hold is Martins. Now I hold currently 48 shares of them, and they are not doing so good, guys. I'm currently 40% down in my investment, which is not a good sign. But they are dividend paying companies, but it's not a great. They are paying 11.94, and as soon as you see that high percent dividend yield, you should just bail out because something is not right there. No company can afford paying that much money and make a profit unless you're a Apple, which has like so much money in liquidity. But Martins are taking a big hit because all the pubs are being closed. So once again, I'm gonna wait it out, see what happens, and once they start making me a good return, or even if it gets back to my investment that I invested in, I'm just gonna sell it off, then or just hold on to it. I haven't decided yet. I will keep you updated. The next stock is Royal.Cell. Now I made a rookie mistake here. It's a good company to invest in, but the rookie mistake I made was that I invested into the company which was a European company. Now there are two companies listed in Trading 212, one which is European one and the one which is a UK one, which trades in pound. This one trades in euro. So as soon as the euro and pound goes up and down, it affects my price significantly. So what I'm going to do, like once I get a little bit of return back, currently I'm going 70% down. As soon as I get there at about 10%, 8%, I'm going to sell everything up and buy the other company. It's a good dividend paying company, has been paying dividend for years. So up until now, obviously coronavirus, but in the future it's going to recover. I know for that sure. And yeah, we'll take it from there. The next stock I have is Tesco's. I have 8.6 shares of it, currently 4.42 minus percentage. It is also a dividend paying share, so I'm just not going to bother looking at the price. It's just a long-term investment, and Tesco has been around for a long time, so I'm not worried about it. Now another free stock I got was Under Armour. Now I shared this link with one of my friends and I got this for free, so hey, I don't mind it. They are not a dividend paying company, but it's a free stock. I'm just gonna let it do its thing. Now the next share I hold is Vodafone Group, which is I hold 1.5 shares of it, which surprisingly is also doing really bad. Well, it's understandable, but it is a dividend paying fund, so in the future I will be investing more in Vodafone Groups. It's a telecom company, and I actually want to get into that sector as well. I have to do a bit more research now. I'm not a rookie that I was when I started investing. But yeah guys, as you can see, that's my portfolio. I currently have 12 investments valued up to 1.2k. It has gone down significantly, but trust me, you don't look at that value on daily basis. You just let it do its thing. unless it's companies like Cineworld where you have to keep looking at it every single day, which I am doing right now because I am slightly worried that my investment has gone downhill. But here's the great thing, I actually invested all this money. I got this money from my eBay reselling that I told you guys in my strategy. I'm gonna leave the link down here. One more thing, guys, I'm not a financial advisor, licensed advisor, so this is just something I'm sharing. But if you do want to follow my channel and learn from my mistakes, you're more than welcome to do so. You can listen to the research that I have done and go do your own research and make your decision based on that. So that's it for this video, guys. I'll see you in the next video. Take care.